Amazon has done shockingly poor over the past few years. And we're going to discuss why and why it's potentially a really good buy right now and to hold on as a long-term opportunity. I'm also going to give you a few options plays so you can think about how to earn extra money if you don't have a ton of capital to buy right now. I understand the market's coming back, so I'm going to give you all that data today. We have a lot to cover with Amazon though, so make sure to leave a like on this video and subscribe. It's a huge boost to the channel and it being a new channel, pushing it out to other viewers. So make sure to do that right now before we jump into it. But let's go ahead and discuss why is Amazon pretty meh, not really performing too well, especially compared to the S&P 500 and looking at the RSI. So you can see on the base, the RSI, let's switch to the weekly time frame here. You can see it's more at the middle of the box, indicating it's not really oversold, but not really overbought. And then also on the Bollinger Bands, looking very similar as well. So what is actually going on with Amazon? First, we have to take a step back and we have to understand what Amazon does as a business and why it does so well. Okay, so Amazon is essentially three different sub-businesses is the way to think about it. They have their first phase, which is the e-com. So this is where you go on Amazon and you're like, I want to buy like more Pepsi. And then you buy Pepsi and it shows up at your door, e-commerce side. So people, real products. Second piece to it is AWS. So this is a big secondary component, totally separate from their e-com. And then the third side of the business is the ads portion. So think of watching Amazon Prime and them having ad sponsorships and the NFL partnerships that they have. So that's really, really good profit margins on that side of the business. And all three of these categories essentially are long-term plays, which is important because Amazon is a company that will surely be around for many, many more years to come because of how established they are across the United States and across the world. Think of how many warehouses they have, think how many vans they have and airplanes. They have a lot of infrastructure and a lot of CapEx costs has gone into building out these processes. So then we look at the actual stock and the chart and we look at it and we're like, well, why isn't it doing better? Like since 2023, it really hasn't done great in comparison to how the revenue's been looking, the fundamentals on the company. So what is actually happening with Amazon stock? So we're going to cover all that today. Now, a cool thing to consider, and we can see here down at the base, they did miss earnings right here, which does suck. But it wasn't like a ton. If you look at Amazon earnings, it has a slow escalator effect, which is really good, and just consistent earnings, beating estimates, profit margins, and you can see just a ton of assets, over $369 billion in assets, and a good amount of liabilities as well, but over 50%. Now in cash flow, a little bit of a downtrend with the cash flow on this past earnings, obviously cash from investing activities. So they're dumping a lot into CapEx and reinvesting into the growth of the company, which is normal to an extent, especially when you think of like planes and vans and the warehouses and data centers. It takes billions of dollars. And just this year alone, Amazon will probably put up to $200 billion in CapEx. So this is something the market is used to, unlike we're looking at like Meta, for example, where Meta is putting just a ton of money this year and next year into CapEx, building out the data AI centers. That's a bit of a shock to the market and the investors, as opposed to Amazon, this being a very, very regular activity to build out these real infrastructure assets. Cash from operating activities year over year did have a 19% growth though, so that's good, 54.4 billion. And if we look back at the chart, we can see that it has had a good uptrend since 2023, but it hasn't really been that great. Even if we look at like where the revenue's headed, it makes you think like, why isn't this stock doing better? So I'm going to give you a couple ways to make money on this with options plays first and foremost before we jump into the rest of it. The first one, if we look at the consolidation here within the stock, if you own Amazon and you're not scared to get called away, selling covered calls on Amazon is fantastic right now. Okay. If you want to earn a little bit more money, then you could definitely sell some puts. You can see right now it's at about 238, selling puts in the 220 range, maybe 225. And then if you get called the shares, you can just run the wheel strategy. That is a really good place to be, especially for Amazon, really good premium, especially on that position. Now, if you're bullish on the direction of Amazon over the next 2 years, you can consider actually just buying leaps on it. Now, for a leap, I'd put it out minimum 12 months. With this company, if you're like really bullish on it, you could put it out 2 years and then just exit a bit early. But with that being said, there is tremendous growth in the stock over the next 5 years. So in my portfolio, I am hanging on to a good amount of Amazon. So we've looked at revenues increasing, good business models, very sticky. So it should be going in a good direction. But why isn't it exactly going in a good direction? Well, we have to look at the market and the overall fears that's happening. Now, with the war in Iran, we have seen a little bit of a downtrend in the market over the past month, but we have a really good V-shaped recovery. As you can see, this is a very strong V, going V, and it recovers up. Now, if we look at this in comparison to actually switch to the hour time frame, if we look at it compared to April of last year, you can see a very strong V-shaped recovery. It did have another dip, but it didn't go down to lower lows, which is the important piece. Now, as long as we don't see this market go down to lower lows, so like go below the 630 range and then go down like 620 or 615, it's just a good V-shaped recovery. And we could see the start of a new cycle, of a new cycle where gas prices come back down, crude oil establishes at a good price where it's not too expensive. And we see Amazon stock being really affected in a good way. People start buying a lot more stuff and start investing back into obviously more and more infrastructure to grow out that e-com space and the ad space as well. So I think this is a for sure buy. It just depends on your view on it. My view on it is I'm going to hold the company regardless for the next 5 years. Doesn't matter what happens. I'm going to hold it for 5 years unless something like crazy happens. But I don't foresee that happening just because they're going into very sticky business models, long-term contracts, and a good variation of business models. Now, if we look back at Amazon, how does this actually affect your wallet though? So with it being a good buying opportunity right now, especially at its all-time high, so 256, dipping back down to 204, you could have made 20% right there on your money if you just purchased in these timeframes. And this goes on the overall idea of the market that you shouldn't be buying when things are just going up. In fact, you have to purchase when things are going down. Because no one's going to tell you and look you in the face and say, listen, I know the market's going down. I know it's scary, but you should keep buying at each interval. You should keep dollar cost averaging here and here and here and also down here. And you should just keep buying. Because when it comes up, it's going to come up quicker than you expect. And this always happens where people miss the actual market. And I was talking to one of my friends and I was like, well, yeah, the market's nearly it's like 2 or 3% away from all-time highs. And he was like, really? Thought things were in a really bad position. People don't even catch on as quick because the bad news is still rolling in. By the time the market's already past all-time highs, they've completely missed the buying opportunity. And it's the same thing that's happening in the market. Look at the recovery. Look at how quick this is. This is in a span of like 3 days. Like if you're busy, if you're on vacation or you're just barely looking at your portfolio, you'll miss it, which is why you shouldn't try to time the market all the time. You should just try to purchase consistently and then get into some good positions. It's the same thing with Amazon. Because of the sticky business models and a quick changing market, potentially in the new cycle with more comfortability, we could see a very, very quick turnaround in the stock and it going to a good direction. So with that being said,